Hi everyone, and welcome to today's webinar for where we will provide an update on Q3 2021. Thank you very much for joining us. My name is Tim Johnston. I'm Managing Director of Apollo Capital, and today we'll be joined by Henrik Andersson, who's the Chief Investment Officer and co-founder. So for those of us that are new to Apollo Capital, a brief introduction. We currently run two funds. The Apollo Capital Fund is our flagship fund launched in February 2018, which we describe as providing investors exposure to the best crypto assets in the market. Highly volatile fund, but has been generating very strong returns of late. We also manage the Apollo Capital Opportunities Fund, which is a market neutral fund focused on yield farming. So other end of the risk spectrum, looking to generate 1 to 2% consistently per month. So we've been running Apollo Capital now for 3.5 years. So we like to think we've got a bit of expertise in the space, and today is a great opportunity to hear from Henrik Andersson, our CIO, and hear from the horse's mouth, so to speak. Back when Henrik and I started Apollo back in February 2018, we would catch up with just about every investor that invested in the fund and have a coffee or two. We have, I think, over 600 investors now, so that's not possible. So the webinar is a great opportunity to speak to ask Henrik questions and hear from him directly. So we are going to encourage people to come to the webinars, and as I said, a great opportunity to hear from Henrik, who for me is one of the foremost authorities on crypto asset investing, not just in Australia, but around the world. With that, please do ask questions. We've got the Q&A function. Love the questions coming through. Sometimes people leave the questions to the end, and by then we might be wrapping up, but please feel free to ask them throughout, and I will ask them to Henrik if relevant at the time, or save them to the end. But also previously we've had questions about the fees and the terms of the fund. That's not really the purpose of today. It's not really to pitch the fund. So let's get the questions about markets and what's going on in crypto markets. So on that note, Henrik, what has been going on in crypto markets?
Yeah, thanks for that, Tim. Yeah, so maybe start with the big picture here. So I think in general, Q3 saw a recovery in the markets from Q2. Again, Q2 was fairly weak in crypto markets. We saw the ban of Bitcoin mining out of China in Q2, and we saw a decline in the markets in May and June. We saw a recovery in Q3, which benefited our funds. We saw the hash rate recover from the lows in June, and that was a positive sign for us. So we saw that recover in the markets in Q3. We have also seen in general this year, and I think an increased institutional adoption of crypto. We have seen all the major research houses, the investment banks like Morgan Stanley, Goldman Sachs, JP Morgan, recently put out big reports around crypto assets. Here in Australia, we just this week saw CBA starting to make it possible for their clients to hold Bitcoin and perhaps other crypto assets. So that's has been a positive development. I think one thing that has fueled the kind of mainstream of crypto this year has been the NFT market as well. So NFTs, I think most of you are familiar with it, but as non-fungible tokens, unique digital tokens that can represent digital art or in-game items or collectibles. And that has really helped taking the whole crypto space mainstream during 2021. So I think before this year, crypto was quite fringe, but I think the NFT market has helped take crypto mainstream during this year. Before the NFT market, we have mainly seen a product market fit within the DeFi, decentralized infrastructure, but DeFi is much less of a consumer-oriented market, I guess. It's more like a new financial infrastructure. I think less exciting perhaps for the mainstream. It's a huge potential in DeFi, but it's not really consumer-oriented perhaps in the same way as the NFT market. So that has really helped fuel the market and take crypto in mainstream. And going back to the fund, we saw that recovery in Q3. So the performance of the capital fund was in July over 16%. In August, we saw a 35% increase in the fund, and we saw a slight setback in September, minus 5%. Overall, that led to a overall Q3 performance of plus 49%. We can compare that to Eureka Hedge at plus 18% and Crypto 20, which is a collection of the top 20 crypto assets, at plus 39% for the quarter.
Henrik, what are we seeing in terms of Bitcoin and Ethereum and the large crypto assets versus the smaller crypto assets? Is Bitcoin and Ether, are they leading the charge? Are the smaller assets leading the charge?
Yeah, the big outperformance we have seen recently in the last, I would say, 6 months has been in the alternative layer ones. So they have performed much better than Bitcoin, much better than Ethereum, much better than DeFi assets. We have really good exposure in the portfolio to those assets. Those are assets like Solana, like Polygon, like Algorand, like Polkadot, like Terra. All of those we have in our portfolio, and they have performed extremely well during this year and outperformed other assets. So we are really happy with that. And part of that outperformance is probably that Ethereum is so expensive to use. So that has fueled the growth of these alternative platforms. A part of it is also that some of these platforms like Polygon and Avalanche have launched something called liquidity mining programs, which have helped us generate a yield on assets and have helped those platforms grow as well. So we have seen a big outperformance in alternative L1s. I think the next kind of evolution in that will be perhaps the Ethereum scaling solutions attracting capital. They are live currently. They're called Arbitrum and Optimism, and we think it's likely that they will launch tokens as well, and we might see a liquidity mining programs on Arbitrum and Optimism. That might happen before the year end, and that could attract a lot of capital back to not the Ethereum main chain, but the Ethereum L2s. And perhaps some of the capital will come from the likes of Polygon and Avalanche, which have seen tremendous growth so far. Perhaps it's worth also mentioning some of the primary investments we've done during the quarter. I think in general, we have made 1 to 2 primary investment deals per month this year. In July, we made an investment in Liquidity. It's a cross-chain wallet. We made that investment together with some other major crypto funds like Galaxy, Hashed in Korea, Coinbase Venture, and Alameda Research. Liquidity is a spin out of Consensus, which is an incubator based in New York. Crosschain is also a major trend. So I think this year has made it very clear for everyone that the future is multi-chain. So we will need that infrastructure for cross-chain communication, cross-chain swaps, and so on. So that's an interesting area for us to invest in as well. And Liquidity falls into that bucket. In August, we made another cross-chain investment. We made a small investment in a protocol called Thor Swap, which is a DEX on top of Thorchain. So that also falls in that cross-chain future that we see being developed. And then in September, we made an investment into a really exciting protocol called Strips Finance. It's an interest rate derivative platform. We made that investment with company from Multicoin and Sequoia, among others. And that investment falls in the category we call on-chain derivatives. In the DeFi space, we've seen a lot of development in the DEX space, decentralized exchanges, and in the lending space. I think the next big wave will be in that on-chain derivative space, and I have made quite a few investments in that space during this year. We like to say that in traditional finance, the derivatives market are much bigger than the spot market, and we think the same thing will play out in the DeFi space. So far, it's been held back by the scalability of Ethereum, but the scalability is coming to the market now through other chains like Solana, but also through the Ethereum layer 2s like Arbitrum and Optimism, and that we think will unleash the on-chain derivatives space. So I think two big trends we see developing in DeFi. One, again, is this multi-chain future. We need the infrastructure for cross-chain communication, cross-chain swaps, the other one being on-chain derivatives. And most of our primary investments have been targeting those two areas.
And Henrik, how do the primary investments work? So what do we get in receipt for the funds, and what's the path to liquidity like?
Yeah, absolutely. So we those are generally structured like a SAFT, which is an agreement of a future token. That token might be delivered to us over time. So there might be a 12-month, 24-month, or a longer delivery of that token. When the token vests to us, there might be a cliff as well, so that vesting period might start in 3 months or 6 months or even 12 months from now. But in general, the path to liquidity is much faster than in traditional finance, in kind of venture capital investing. And in some cases, it's very fast. So with Strips Finance, we made an investment in early September, and we have already some tokens that are liquid today. And by the way, that token is trading over $5 today. We made the investment early September at 50 cents. So that's kind of, I think a showcase of how quick the path to liquidity can be, and also kind of what kind of returns you can achieve being an early investor in crypto.
And Henrik, you mentioned cross-chain. What does that mean? Does that mean I can take my Ethereum and use it on the Bitcoin network, or is it just a broader term that can mean a lot of different things?
Yeah, it can mean a few different things. One is that you're able to move assets between the different blockchains. So for example, in the Apollo Capital Opportunities Fund or Yield Farming Fund, we farm across multiple blockchains, and we often move stablecoins between, for example, Ethereum to Polygon, or from Ethereum to Avalanche. So you need to have some kind of bridge to bridge the tokens between the different blockchains. With protocols like ThorSwap and Thorchain, you're able to swap tokens between the chains as well. So while traditional DEXs only swaps tokens on Ethereum, for example, you can actually swap tokens between blockchains. We made a really interesting investment in that cross-chain swap market called ChainFlip that will soon come to the market, and we are really excited about the potential for that, because so far the DEX market has been restricted to a single chain. But once kind of you have that cross-chain ability with DEXs, then it unleashes a much bigger opportunity, and the future is definitely cross-chain. So there will be an increased use of bridges, of cross-chain swaps, and these kind of primitives.
And is that a serious competitive threat to the Binances and Coinbases of the world?
Potentially. With a DEX, you can't use fiat currency, so you will still need probably centralized exchanges to onboard people into crypto. So obviously on some centralized exchanges, you can use your Australian dollar or US dollars to trade with crypto. Using DEXs, you will need to have crypto already. Maybe we should mention the Opportunities Fund as well. Big development there. We actually closed the fund right now for new applications. We reached over $50 million in total AUM. So we're very pleased with that. We can mention the returns as well. They have been ranging from 0.83% in July to 2% in August, and September, so 1.5% net return. That leaves us just below 30% since inception in December last year. I think with the returns in October, we will be at over 30% since inception. So we are pleased with that, and we hope to open the fund for new investment in the future, and we might also launch other market neutral funds in the future. Apart from that, maybe briefly we can mention regulation as well. I know we always get a lot of questions when it comes to regulation in the space, and we have seen some major development there, but I think there is also some things underway. So one development was that the first ETF got approved in the US. That's something that the crypto industry has been working on for over a decade. So it was somewhat of a watershed moment when we got the first ETF that started trading in the US. So very big volume from start, close to $1 billion the first trading day, which is bigger than any first day ETF launch in the US. This ETF is based on futures, so not spot Bitcoin. That has its disadvantages. Holding futures, you need to roll them over time, meaning they expire and you need to buy the next month, and that means that there will be some costs associated with holding that ETF that you will not incur by holding spot Bitcoin. That cost could be something like 10 to 20% per year, so quite substantial. So probably not the best product for investors, but still a very good development and a good first step. And hopefully we'll see ETF based on cash Bitcoin, on spot Bitcoin one day as well. And then there has been a lot of rumors and talks about regulation coming to stable coins. So we do expect some announcements when it comes to regulation around stable coins before the year end from the US again. We might also see some clarification when it comes to what regulatory agency will have their main responsibility when it comes to crypto in the US, because there have been a lot of competing regulatory bodies in the US that have each some say when it comes to crypto. So we do expect that to happen.
Henrik, got a question here from Paul. I think it was in regards to the strips deal that we did. We're invested at 50 cents and now trading at $5. Question is, that's great, but is the business / functionality / TAM 10x bigger or better, or is that market speculation that has driven that price up?
Yeah, look, it's probably a combination. It is a potential huge market. The interest rate derivative market is, as we all know, huge in traditional finance, and strips finance has a leading place when it comes to doing that in DeFi. So that's a huge target market. Sure, there is a lot of speculation because the platform is not really live. They're launching on Arbitrum. So it's an early stage investment, and they will need to deliver on the roadmap. But we are excited about it, and we plan to be long-term investors.
And what's our approach there? Do we, as tokens become liquid, do we sell them, or does it just depend on each primary deal on a sort of case-by-case basis?
Yeah, if they fail to deliver on their promises, we would definitely look to sell them. But obviously, we're long-term supporters of the teams, and we have some tokens that are liquid today. So once there are staking possibilities, we will usually stake those tokens to earn some yield on them as well.
Sure. And NFTs, Henrik, it's been a massive talking point. I caught up with some friends on Monday night, now that we're allowed out of lockdown in Melbourne, and one was talking about NFTs, and I'd love to speak to an NFT investor because they just didn't understand the space at all. How are we approaching NFTs? Do we invest in NFTs directly? How are we approaching that space?
Yeah, great question. So we don't plan to invest in NFTs directly. We do plan to invest in the infrastructure underpinning NFTs. It is a growing market. It is here to stay. I think that's very clear. It's have been a little bit harder to find the infrastructure investments when it comes to NFTs. Obviously, the blockchains will all benefit. Most of the activity has been on Ethereum so far, but it's also a lot of activity on chains like Polygon. There are marketplaces, and there are other possibilities. So far, we've made 2 NFT-related investments in the fund. One is called Solve, which is a financial NFT protocol, where we are an early-stage investor. I think that investment will be announced soon. They're closing the round. Another one is Perion. Perion, we were a seed investor, and we made that investment just last month. Perion is working in a very interesting vertical called Yield Guild. Some of you might have heard of YGG, which is the biggest one out there. And they basically hold NFTs that they rent out for something called play to earn. And those people using the NFTs to play earn an income for the DAO, which is a really interesting concept. It's basically less than 12 months old, but we see a lot of yield guilds coming to the market, and we got a really good opportunity to help Perion get off the ground as an early stage investor. Apollo is also an advisor to that project, so we're very close to them, and they're currently looking for partners to grow even further, and we are helping them in that.
And Henrik, you mentioned before the news from CBA. So the Commonwealth Bank of Australia is allowing crypto in its app, which for me is huge news, given the banks have been staunchly anti-crypto for any businesses to do with crypto. It's been very hard to get banking relationships. So how does that play out? What does that mean? And a question from Charity Lynn here that's come through, which I think is quite interesting, is what do you think the future of traditional banks is versus DeFi?
Yeah, so really happy to see that development. They're finally coming around, some of the banks. I think probably others will follow. We saw DBS in Singapore, which is the biggest bank in Southeast Asia, earlier this year as well, launched a crypto exchange. And now we are seeing CBA in Australia, Australia's largest bank, allowing the customer to buy Bitcoin and hold Bitcoin. So I think that's a really good first step. I expect fintechs mainly to tap into what's happening in DeFi. So that's another big trend that I think we will see. The likes of Revolut and others tapping into the yields that you can achieve in DeFi, for example. I have a hard time seeing that not happening. I think the opportunity is too big for them to ignore, and that could bring in the mass market into DeFi through those consumer-oriented apps. There are also rumors that Revolut will enter crypto in a very big way. Currently on Revolut, you can buy and sell cryptocurrencies, but they're also looking at issuing their own token. Just as an example of one fintech that is looking at crypto and DeFi. So I think we'll see more of that.
Question here from Mark Alexander. Interesting question. I like this one. What's the team's thoughts on Cardano, please? Does Apollo have a position? The ecosystem looks very positive. However, the whole thing just seems to be all promise, nothing delivered. Has it got legs?
Yeah, that's sort of our view as well. There has been a lot of hype around Cardano. The Cardano, obviously, the token has done very well, but we don't see much activity on the Cardano blockchain. That's what makes us quite skeptical to the market cap of Cardano when we compare that to the activity on Cardano, because they are just now launching smart contracts, for example, that is needed for anything related to NFTs or to DeFi. We think the market cap is too high compared to the activity we see on Cardano. So because of that, we don't hold a position.
Interesting question here from Phil. We've got token value versus equity value. What are your views on traditional equity issuances if these blockchain companies are seeing significant market caps via their utility tokens? Will we see less traditional equity shares on offer in lieu of tokens, or will company token holdings be valued as an asset on the balance sheet in traditional valuations?
Right. So I think the projects we invest in are a little bit different from companies. They are in many cases decentralized. There are some similarities with equity. So we talked about on-chain cash flow for some time. So when you stake a token, you can sort of earn some revenues that the kind of the economic revenue that is happening on that protocol. So in that way, it's similar to equity. I do think that that they're quite different from traditional for-profit companies, and that's obviously a huge market. We don't see necessarily the STO market that is being called, like when you have equity trading at tokens. I don't know if that's what is being referred to here. We don't really see that market taking off in the near term. So I think they will remain separate. What's your thoughts, Tim?
I'll leave that one to the CIO. Thanks, Henrik. Yeah, moving on, we've got a couple of specific questions from Jack Hugh. So he said, would you recommend the Miso launch auction again? And he's also asked about your views on the Sand ecosystem. Yeah, so
Miso is if I get this correct, is the SushiSwap launch pad. That was compromised. They had a developer that was malicious, that inserted some code that shouldn't have been there. Luckily, they caught that. And I don't think there was any external party that experienced losses. I might be wrong in that. I don't have a strong view on the future of Miso. And I think he asked about Sand, which is a metaverse, if I'm not wrong. We don't have position there. I think obviously with the Facebook announcement, there has been quite a bit of hype around metaverse tokens. I think there might be potential for some bubbles forming there, and you should always be kind of careful betting on a single game or a single token or NFT as land. I think it can be quite speculative.
It's a good segue to another question from Tim Wong. Any views on the Meta Facebook announcement and the impact that might have on crypto?
Yeah, I think it's in general, seeing Facebook embracing the metaverse, I think is great for the crypto space. During the presentation, Mark talked about crypto, and he talked about NFTs. So that's definitely in their roadmap. And they obviously see the metaverse as the next big development after the web and the mobile web. And I think Facebook really embracing the metaverse will accelerate what's happening in the NFT space. So I think that's positive for the whole crypto space.
Thank you, Henrik. We've got a couple more procedural questions which we might tackle. So from Alex, can we talk about the operational DD that we do on investments and also valuation marks for assets that are not publicly traded?
Yeah. So starting with the second part of the question there, for assets that are not trading, we mark them at the lower of the cost price. Yeah, if they're not trading, the lower the cost price. If they're trading and they're still under a vesting schedule, they're marked at the lower of the market price and the cost price. So in general, very, very conservative, I think. When it comes to due diligence, we are looking at a lot of different projects all the time. I would guess probably an average of one project per day. Roughly, we invest, as I said, in 1 to 2 per month. So we are definitely doing our due diligence or research, and we are quite selective in the investments we do. We talk to the team most often multiple times before we make a commitment, and we have, I think, the team in place to do the proper due diligence.
And on that, which research houses do you consider as part of your in-house research for investing in crypto assets and blockchains? And I guess more broadly than that, for viewers that are looking to learn more about crypto, are there any podcasts, newsletters, materials that you think are worth subscribing to?
Yeah, the ones we subscribe to are Messari and Delphi Digital. I think those two are probably two of the leading research houses out there when it comes to crypto. Yeah, when it comes to podcasts, I don't know. You probably have some ideas as well, Tim. What's your favorites?
Yeah, a mix. I quite like Coinmetrics. They do a pretty simple newsletter that comes to your inbox, and you can read that. I haven't had time for podcasts lately without the morning commute. That's when I used to sort of take on board the podcast. But Coinmetrics is a good newsletter. But the in-house research, I believe that's all done in-house. We don't rely on any like broker type research that you'd see in the equity space.
Correct.
Yeah. Got lots of questions coming through. Thank you, audience. This is it's great to see the engagement. Andrew Middlebit asks, would be keen to hear your thoughts on the BetaShares ETF launched in Australia today.
Yeah, so if I understand the BetaShares ETF, I didn't see the announcement this morning because I've been busy with other things, but if I'm correct, it's an ETF based on equity, on shares that are involved in crypto or blockchain in one way or another. Our preferred way to get exposure to crypto is through crypto assets. So hopefully we'll see one of those in Australia as well one day. I do believe that's possible. We saw ASIC, the regulator here in Australia, very recently clarify the rules of a potential exchange traded fund or ETP that holds crypto assets directly. So making that clarification makes us believe that we might be weeks or months away from having an exchange traded product in Australia.
Yeah, my take on that was I took that as quite a bearish sign that BetaShares had decided to launch this ETF based on crypto companies, which is obviously a very different thing from an ETF based on crypto assets. And so I thought that that might be a negative sign that the real ETF, if I can call it that, like that, is a long way away. But then I have seen some news and heard some whispers that maybe it's not as bearish as I sort of, or negative as I first thought, and that a real crypto ETF in Australia might not be too far away. So I think it's a watch this space. We know that Beta Shares in particular and a number of other providers are pretty keen to launch something. And obviously we've seen equivalents in Canada and a Bitcoin ETF, albeit based on futures in the States. So I think that's going to lower the barriers for ASIC to approve something, given that other global regulators have already done it. Interesting question here, Henrik, from Saul. Is there a natural ceiling to token values, as high prices will curtail activity on chain?
That is especially true for something like Ethereum, I think, but less true probably for the L2s. So the scaling solutions, I don't think suffer that problem. You might actually see the reverse when it comes to the L2s, which is really interesting because they, an L2 like Arbitrum, for example, they validate the transactions on the main chain. They sort of share that cost for validating the transactions on main chain. So the more activity you have on the L2, the lower the cost on L2, because they all share that fee to verify the transactions on main chain. So you actually have the opposite potentially for the L2s. So that's not necessarily true for the scaling solutions.
Interesting question here, very sort of general one, but a couple have asked it, sort of when's the bear market? Is it around the corner? And thoughts on a recent run? Is this sort of sustainable or a bit too much speculation?
Yeah, look, we are definitely in a very good period for crypto. And we, as I said, we've seen kind of crypto going mainstream as we speak. And particularly this year with the things like NFT that has really bring in the mass market into crypto. But yes, we will see volatility in the future. It's bound to happen both on the upside and the downside. But right now the momentum for crypto is really good. But there will be periods where we see, you know, negative returns for many months in a row, like we have seen in the past. So I don't think, you know, we will not see cycles again. That will happen. But right now, momentum looks really good.
And Henrik, I've heard a theory that future bear markets in crypto may not be as severe as previous bear markets in crypto, due to the amount of interest and in particularly the institutional interest coming into the space. The theory is that if you've got smart investors, institutional investors that are looking to enter the space but are waiting for a pullback, they might see that as an opportunity to invest and therefore, you know, push prices back up, or at least stop them from falling like they have in the past. Thoughts on that theory?
Potentially that has some merit. You know, sometimes, you know, and I think we have done this as well. We have pointed to the potential institutional money that might enter crypto. But I think we also are seeing organic growth in crypto. So if we are seeing more usage of NFTs, more usage of DeFi as a new financial infrastructure, that actually creates more revenue within crypto. So I don't think we have to rely on necessarily external capital coming into the crypto markets.
Okay. And we've got a couple of minutes left. So thank you everyone for attending and for the questions. If you have any final questions, now would be a good time to send them through. A couple of last ones. Another one from Mark. Henrik, where do we see the majority of our primary deals coming from? Are they Australian based, overseas, bit of a mix?
Yeah, a really good mix, I think. So the primary deals that I mentioned in Q3, they're all overseas deals. SIPS Finance, I think, are based in Singapore, but also elsewhere. Liquidity, as an example, is a US-based deal. So they're all over the world. Period, which we recently did in the NFT space, is based here in Melbourne. So it really varies a lot. Obviously, we have really good coverage of the Australian markets, and we have made successful investments in the Australian DeFi and NFT space, like Tracer before, for example, which is Australian based in the on-chain derivative space. So we have really good I think coverage of the Australian market, obviously, but we're looking at deals all over the world.
And what's the typical sort of sizing for new investments within the portfolio?
Yeah, it's a good question. I think it usually ranges from, say, 25 basis points to 75 basis points of the portfolio, somewhere in that range.
And going back a step, a question from Colin: what is your process when deciding what assets to invest in? So, fitting into the DeFi focus, where do we go from there?
Yeah, exactly. It really starts with that top-down investment thesis that we have, and filter down from there. So, we have a focused approach on which sectors we invest in when it comes to DeFi and increasingly the NFT space. So obviously the DEX space has been a big focus, the lending space, and as I mentioned, that is moving more onto on-chain derivatives recently. And obviously we are increasingly looking at the NFT space as well. So it really starts with that conviction we have of where the value is being created in the space.
And last question, I think we'll take from Gary. Can you comment on your views on coin liquidity? I understand that only 11% of Ethereum is available for trading. Do you track this, and is that relevant or true?
Yeah, I don't know the number offhand, but we have seen with the launch of the Beacon chain earlier this year, which is the proof of stake chain for Ethereum, we have seen increased number of Ethereum being locked up, staked on Ethereum, and I think that will continue to increase as Ethereum, we expect in the first half of next year, launch the full proof of stake, moving away from proof of work. So I think you will see more and more Ethereum being locked up in staking, if that's what is referred to here.
11% sounds a bit low, though. I would have thought for only 11% of Ethereum being traded. Do you agree with that, or not sure?
Yeah, it sounds a bit low, I think.
Yeah, sounds like, yep. Excellent. All right. Well, thank you, Henrik, and thank you, audience, for attending today. Lots of good questions, lots of people attending. So really appreciate the questions and the engagement. As I said, we are keen to push the webinar going forward. So next one will probably be late January, after the Christmas and sort of January break. Thank you, Henrik, for your time and your thoughts.
Thank you, Tim, and everyone that asked a question.
Thanks very much. Thanks, everyone. Have a good day. Bye-bye.
Bye. Bye-bye.